This has been a very bullish week. So I'm hoping that with the PPI, the CPI, the this has been a very with the what were the other announcements this week? Unemployment was a good metric. Um, like I said, between those three, PPI, the CPI, and the initial job claims, all three of them were bullish. So I'm hoping that all of that bullish sentiment will keep the markets going forward. We had a bullish one-on-one session yesterday. So I did want to mention that as well. So like I don't know if Willie's in a room, but like people like Willie and Abena and Lisa, we've been waiting for some kind of bullish price action for me to have my one-on-ones. So go ahead and try to schedule them for next week. Um, but I'm hoping that that bullish sentiment will kind of transition over, especially this being Friday. I'm hoping that this will be a very good day to trade. So I'm not going. Well, it depends on how soon I finish the presentation. I'm not going to rush through it to get off at 8:30. If you guys want to get off at 8:30, no problem. I'm planning on getting off before 9:30. And then to try to trade at that point. But I think the 10 o'clock is going to be a very good time. I think the 11 o'clock is going to be a good time. So I'm shooting to get off around, like I said, 9:30 to trade the 10 o'clock. But I'm hoping that with all of the positive sentiment, with all of the bearish kind of trend that we had, coming into 2025, I'm hoping there's a transition and the bull rally has kind of taken back over. So I'm gonna get off before 9:30 so everybody can kind of position themselves. Hopefully this being a Friday with a very good week, that everybody will have a good last day going into the weekend. All right, let's see what we got with this presentation. Let me share this. Oh, I didn't make my tea. No problem. I'll drink it later. All right, so I think everybody in the room at this point knows what the four horsemen are, but I'm going to go ahead and reiterate it because I will be broadcasting this a little bit later. I'm broadcasting right now on YouTube. A lot of people don't know what this is. So we have this custom analysis called the prime correlation. It is the relationship between the dollar and the oil. And every single thing that happens in the stock market is reacting to that dollar oil relationship. But a contingency, a nice little side piece of that relationship is the four horsemen. Because in the US, in US markets, that prime correlation is the oil or US oil production and the Fed, which is the US central bank. Let me say it again. The prime correlation in the US is US production of oil and the US central bank. Well, guess what? There's oil production all over the world. Every major country has its own central bank. So the four horsemen, once again, in the US is US production and the US central bank, along with bonds, US bonds, and gold. But the real understanding of the four horsemen are the same four commodities: the dollar, the oil, the bonds, and the gold. And every single country has their own version of the four horsemen. Every country has their own bonds, government bonds and corporate bonds. Any corporation in that country. So the bonds exist in every single country. Every country has its own central bank. Every country has its own currency. Every country has its own oil production, whether the country is producing the oil or the country is net importer, where they are importing the oil. Either way, every country has the same four commodities. And if you monitor those four commodities, it will let you know what every financial system, every financial entity is doing. So let's show you how this works. With the four horsemen, you can track institutional influence, and you can track you can track global influence. Once again, crude oil, whatever the currency is for whatever country you're analyzing, the bonds of the same country you're analyzing, and the gold. Everyone has a different relationship with gold. Gold is no longer a currency. That was the primary purpose of gold, before we got our fiat currency. The new purpose of gold is technology. Every motherboard, every single computer, every single piece of technology has gold embedded in it. So gold is no longer a hedge for currency. It's now directly tied into technology. But when you are looking at it from the stock market, it's something called a safe haven, and we're going to talk about safe havens in a minute. These are well, let me exclude oil. Let's take oil out of the equation. Whatever the currency index, right? You have the dollar index, you got the euro index, you got the British pound sterling index, you got the won index, the yen index, you got the ruble index, you got the peso index. Almost every country that has a central bank has a future market based on their currency. Now, I did want to mention this, that all of you that have the course, if you have the crossbow or the sniper AI, I have given you the baskets of currencies. So let me explain what baskets are. So you have a currency, right? Let's use the US. The US has this the US currency, the US index future. That US currency in the future markets, the currency future markets, that US currency is compared against a basket of 6 currencies. I'm not going to tell you what it is because that's giving away the secret. But as I said, if you go to the course workbook, I made sure to give you every single basket. Every basket of currencies compared to other currencies. It's in the course. It's in the workbook. So you can take that basket of other currencies and you can literally do like this correlation. And you can kind of figure out what the four horsemen are in a particular country. and that basket will help you kind of figure out what it is. All right, so basically what the four horsemen in, all right, four securities, four commodities. The global markets are influenced by these four commodities and these four securities. We're going to show you how to do it in today's presentation. So first off, we're looking to use the four horsemen to track institutional influence. And the number one way that institutions will influence the markets is by manipulating it. They control the price. They control the volume. They can control the news. They can control everything. So the way that you can kind of watch their control is through the four horsemen. Once again, that's what we're going to show you today. So what we're going to do is we're going to take you through several levels or several instances on how the institutions will manipulate the markets. And then once we show you, I think we're going to go through about 5 or 6 of them. We're going to show you all the different ways the institutions will manipulate and control the markets. And if you're a part of the markets and you don't know who the institutions are, if you can't identify what they're doing, then you're being manipulated. So the idea is to identify how they're manipulating the markets and then use the four horsemen to identify it. So let's go through a couple of ways on how they manipulate, how they can control what the markets are doing. The first way is through something called the efficient market hypothesis. And I promise you, you've heard of this. You just haven't heard the term. What is the efficient market hypothesis? This is the concept. Once again, we've all heard of it. This is the concept that you have heard either in a book, on a video, maybe in an interview on Bloomberg, where they will tell you that everything is built into the price. There is nothing you can do to affect the markets because it's already built into the price. And I have done presentations in the past where I have proved that this is a false hypothesis. It's not built into the price. There are so many things going on in the supply chain, in the global supply chain, that we have no idea what they're doing. That is not a part of that price. We can go right now. If I truly wanted to prove this, I can go out to the news right now and find a piece of data that is not factored into the price. Because that's how we make money. As value hunters, we go out and find the data that's not a part of the price. So this is a false hypothesis. But one of the ways that they manipulate you is to make you believe that every single thing in the stock market is built into the price as the price is moving. The stock market and that price action is always giving you the fair market value. False statement. Because that is the premise of us value hunting, to go out and find value that's not in the markets. And if you have been a part of my secret session, I have proved this beyond a shadow of a doubt. Because all I do is give you hidden value that's not going to affect the markets for weeks, months, and years in advance. So I've already proven that the efficient market hypothesis is false. But the majority of the people that are trading the stock market do not know that. They believe that it's built into the price. And that just gives us a better chance to make money. We know something that the majority of people don't know. All right. So once again, if you can see on this slide, I put Investopedia because I got this definition from an article off of Investopedia. So if you want to research a little bit more on the efficient market hypothesis, just go to investopedia.com and you'll find this same article. The second way, now hold on, let me kind of reiterate. I showed you this because the institutions will manipulate the price. That's the reason why I showed this slide. That price action that we think that everything's built into it, they control the price. And in a little bit later, I'm gonna show you the different ways that they do. But we start off here, that price is being manipulated. The second thing that is being manipulated by the institutions is the volume. What do they tell you? Inside every book, inside every video, they tell you volume confirms. Pretty sure you heard this before. Volume confirms. If the markets move, look at the volume. It will confirm. And it's a false statement. Because once again, I'm going to show you a little bit later in this presentation why volume is being controlled. Volume is being manipulated. Let's read the slide. It says one of the key aspects of technical analysis is volume confirmation. By using volume confirmation, traders can better predict future price movements and make more informed trading decisions. That's what they tell you. Now, notice this is in quotations. I got this quotation off of fastcapital.com. This is what they teach you. Volume confirms. And it's just another way that the institutions manipulate you. Another thing, now we're getting into how the institutions manipulate. We're going to show you how they control that price. We're going to show you how they control that volume. And one of the ways they do it is through a public block trade. The institutions have the ability to trade off market. Right? Now, when the price action is them trading on market. So if they're buying shares, they're buying contracts, they're buying commodities, whatever it is, when they buy it on the public market, the price action moves. The volume moves. But they have the ability to trade off market. And when they trade off market, it's called a block trade. Block trades are generally broken up into smaller orders and executed through different brokers to mask the true size. So let me give you an example. They have $1 million that they want to buy corn. They want to buy some kind of commodity. What they will do is they'll break up the $1 million. They may break it up in $250,000 sections. They may break it up into $100,000 sections. They may go so far as to break that $1 million into $1,000 sections. And then they will assign each one of that blocks of money to a shell corporation. And then they will assign the shell corporation to a broker. Different brokers, because they don't want this broker to know that they're selling and buying on this broker. So the brokers don't know the movements of the institutions because they break it up. So even though it's being sold publicly, they broke it down into such smaller pieces that you still don't know what institution is buying and selling. This is how they manipulate you on the public trading platform. The public block trade. They just break it down to smaller segments so that volume doesn't spike and that price action doesn't spike. The second way is they'll do it privately. They do it completely off market. They don't have to break it up. Sometimes they still do. But by trading off market, they're usually selling to each other, which we're going to get into that in a minute. So the private block trade is they sell large privately negotiated security transactions that are arranged away from the public markets. Once again, to lessen the effect on the security price. If they don't want that price to move, they're going to sell it privately between each other. And that brings us to the other one, dark pools. Dark pools is when all of the institutions will get together and sell to each other. What is the difference? The private blockchain trade is just one institution with another institution. But when you talk about the dark pools, multiple institutions will come in and they will trade with each other, all for a purpose of manipulating the markets where we don't know what is being sold, how much is being sold, and for what price. So once again, let me reiterate. They control the price. They control the volume, which is why I teach you not to analyze charts. Because everything you see on that chart is being controlled. They're making that chart do exactly what they want. And if you're following the charts, you're going to lose. And I know that's a bold statement because there are millions of people using technical analysis. But it's only the select few like us that know better. And I've also showed you in the classroom as well as in the one-on-ones that you can still analyze the charts. You just can't analyze it in the way they want you to. I teach you a whole different way to do it. And the whole purpose is to make sure that you're not a part of the herd. You're a part of the hunt. We recognize that they're breaking up their trades in the public markets. We recognize that they're trading in the private markets. We recognize that they're trading with each other off market. So we do not trust that price. We do not trust that volume. Something else they will do is something called price ramping, right? Institutions will initiate a series of orders or transactions in an attempt to ignite a price movement in that market or a related market. And I've told you about this. I've even showed you when we look at the trends, when we look at the cycles. What do I tell you? What is one of the strategies, one of the number one strategies that the institutions will do? They will dump like $5 or $10 million into a market. And with that high volume, like I said, they pick and choose when they want the markets to move. If they don't want that price and that volume to move, block trade, dark pool. But if they want you to see it, they won't even break it up. They won't even use the public block trades where they break it up. They'll just dump 5 or 10 million into the markets. And what does the market do? Straight up. And I've shown you that a lot, that the markets go straight up because multiple institutions will trade at the same time, driving the market straight up. They do it on purpose. Why? because they know that the majority of people, when they see that market go straight up, whether it's equity, whether it's index future, whether it's Forex, whether it's options, whether it's crypto, when any of the cheap, when any of the novice see that market go straight up, what is the way they react? To the moon. Everybody's now rushing to the markets to put their money in. They don't know why the markets went up. All they know is that it went up, and it means money for them. That's price ramping. To dump money in the markets to make everybody else buy more. Another way that they manipulate the markets. Now, all of the ones that I just showed you is complete market manipulation. This next one is the only legitimate. The only legitimate movement institutions will make is called sector rotation. And this basically, they're using market cycles. So let's go back to like commodities. Typically, a commodity, typically like a financial market, they have 4 years up, 4 years down. Now, sometimes the market is based on harvest. Sometimes a harvest can be 2 years up and 2 years down. So if you're dealing with some kind of a future market based on a commodity, it'll be based on the harvest time period. But on average, typically a market cycle, 4 years up, 4 years down. And what institutions will do is they know that the 4 years up is time to make money. So why would they stay in the market if they know that they're in a 4 years down, unless they want to short it? So sector rotation basically means that they'll put their money in one market on the 4 years up. And then they predict when the markets are going to start doing their 4 years down. They'll pull their money out and then they'll put it in the next market for another 4 years up. This is not necessarily market manipulation. That is just the business as usual. All of the previous ones, the price ramping, the dark pools, the private blockchains, block trades, all of that is just straight manipulation. And I went through all of these to prove to you how the institutions move. And I'm telling you that if you follow the four horsemen, the oil, the currency, the bonds, the gold, if you follow those markets, you will be able to tell when the markets are using those strategies. Because 3 of those 4, the bonds, the gold, and the currency, 3 of those markets are called safe havens. You can see when a market, when institutions will put their money in a safe haven and when they take their money out of a safe haven. Now, what is a safe haven? A safe haven is an asset that tends to retain or increase their value during times of market volatility. So when the markets are chaotic, when the markets are falling down, institutions will take their money out of those volatile or unsafe markets and they'll put it in a safe haven. Once again, dollar in any kind of currency index, bonds, or gold. And the reason why those are considered to be safe havens is because they don't move that much. Volatility stays pretty low. So once again, if the markets are volatile, if the markets are not predictable, if they cannot control the market, they will pull their money out of their positions and stick it in a safe haven. And you can see it when it happens. That's what the Four Horsemen is all about. You can see the institutions pull their money out of, even with the sector rotation, you can see the institutions will pull their money out of one market, and basically what you're looking at, you'll see one market decrease, and simultaneously as that one market is decreasing, you'll see a safe haven increase. And then everybody's putting their money, or all the institutions are putting their money in a safe haven. And then they're going to recalculate their portfolio. They're going to recalculate their strategies. And then you'll see the safe havens go down and you'll see another market go back up. This is a secret that most people don't know. All you have to do is watch currency, gold, bonds. And you can easily predict what the institutions are doing, even the manipulation. And you're not going to understand the power of that until you use it. Everybody else, millions of people are being manipulated. But if you track the safe havens, if you track the Four Horsemen, you will know exactly what the institutions are doing. So let's remember what I said. We're always looking for application. So what is the application of this? The application is that you want to avoid the manipulation. You don't want to be a part of that. You don't want to be a part of the traps that they set. They set traps daily. Throughout the day, they set these little traps. So the best way that you can avoid the traps is to know how they're moving. All the millions of people are falling for the traps. We're not going to be a part of it. We're a part of the hunt, not a part of the herd. Once again, the three safe havens are bonds, currency, and gold. And as I said, every single country has their own set of bonds, their own currency, and their own relationship with gold. And also keep in mind that some of the institutions are from that country. Let me give you an example. HSBC, I believe HSBC is Canada. But there's another bank in Switzerland. Give me a second. They bought out. There used to be two, but one bought out the other one. Credit Suisse. Credit Suisse got bought out. Let me look it up. Credit Suisse got bought out. There used to be two. And if anybody knows it, let me know in the comments. But Credit Suisse got bought out. And I'm trying to remember the name of the bank that bought them out. It says Group AG, but I'm trying to find the actual bank. UBS. UBS. UBS bought out Credit Suisse. But those two banks are in Switzerland. So when we're talking about institutions, if you want to follow what's happening in Europe, because here's another secret that I did not know. Are you ready for this one? I just found this out in 2024. You ready for this, Jim, that I just found out? The euro, that euro currency that they're using, there's a central bank attached to it. Do you know what the euro is? The euro, all the euro is Germany's currency. All they did was take Germany currency, and now keep in mind, Germany still has their currency. All they did was duplicate Germany's currency and called it euro. I just found this out last year in 2024. The euro is Germany's currency, and I gotta remember the name of it. What is Germany's currency called? Anybody know? I'm gonna look it up right now. See, it even says euro. AI even called it the euro. It's the euro. I did not know this. Everybody is using the euro, but it's Germany's currency. I just found this out last year. So my point of showing you like the UBS and the currency and all of this, because when you go to a certain region, you got to find out who the financial institutions are in that region, in that area, in that stock market. So when you create your four horsemen, you got to make sure that four horsemen is connected to that institution or that group of institutions, because they are manipulating their stock market. So if you use the four horsemen in that region, you can't be manipulated. And this is global. And that's why I mentioned in the course, you have all the baskets. You have all the baskets of currencies. All you have to do is figure out, is that country connected to OPEC, or is that country connected to US production? So that's the oil. Then you can go figure out where their bonds are. And then you got to figure out where their gold is. Are they an exporter of gold or an importer? Are they an exporter of oil, or are they an importer? You got to figure out what the four horsemen is for every single country. And you can identify the market manipulation of the institutions in that region. And like I said, I can tell you all this, and you can, oh, yeah, yeah, that sounds good, Aaron. You're not going to understand the power until you use it. Institutional tracking. Traders can track institutional positions when they use those block trades, when they use um the price ramping. We know exactly what they're doing before everybody else. Now, another thing that you can do with the four horsemen, like that's tracking institutional movements. But I also said that we can track global influence. So what you can do is you can use the same four horsemen in whatever region that you are analyzing. If you're on this level of geopolitics, you could take the same four horsemen, identify the four horsemen for that country, for that region, for that central bank, for that currency, and you can determine the economic health of that country, of that currency, of that central bank. Currency strength, inflation, as well as their foreign policy and trade. Once again, that is why I gave you the baskets of currencies in the course. because you can figure out any relationship between any two countries. We're going to show this to you in a minute. We're going to show you how this looks, how you can take any two countries, hundreds of countries around the world, and you can identify different relationships with different countries. And I'm going to keep saying this. You're not going to understand the power of this until you use it. Then a light bulb's going to go off. All right. There are more than 800 trade agreements around the world. Remember all those countries? There are, because one country can have a dozen, if not 100 trade agreements. I want to show it to you in a minute. And if we have hundreds of countries and every country has hundreds of trade agreements, exponentially, we're talking about hundreds of thousands of trade agreements. And you can track those relationships, causal sequence. You can predict what's going to happen around the globe. So let me give you the first way on how you can analyze these relationships. If a country, and we're going to use China as an example, China does a lot of business, a lot of trade agreements in Africa. And I explained this last month, right? China is trying to replace the World Bank. They're trying to replace the World Bank. You don't have to use the World Bank. Use China. So China has migrated themselves into that ecosystem and that supply chain of what Africa has to offer. You can get the loan from us. We're going to give you a cheaper rate. We're going to work with you better. You don't have to use the World Bank. Use China. But here's the problem with that. If China was to have a trade agreement with every country in Africa, they would have to pay global taxes. They would have to pay the import-export tax on every one of those countries. So do you know what they're going to do? They're not going to have a relationship with every single country. They don't want to pay those taxes. They don't want to pay those import-export fees. They don't want to pay those tariffs. So you know what they're going to do? They're going to find one country that they can trade with. And in this example, they decide to trade with Mauritius. That's their in. They're going to trade with Mauritius. They only got to do that one trade agreement. They only got to do that one any level of tax, imports, all of that. They do it with Mauritius. And because Mauritius is a part of Africa, they don't have to pay the same trade fees. Let me give you the equivalent in the US. There are certain states, Michigan, New York, Florida, California, Texas. They have trade agreements with other countries, the states. So even in the US, any of the foreign countries, let's use Mexico as an example. Mexico is trading with Texas. That's all they got to do. They trade with Texas. They bring in all of their surplus, all of their imports come in through Texas. And now, since Texas is a part of the US, they don't have to pay the same taxes. Mexico doesn't have to do trade agreements with every state in the US. They only got to trade with Texas and California. And then they can disseminate the rest of their products through Texas and California. And this happens all over the world. You enter into a country or a continent through one country. And since that country is in that region, they don't have to pay the same import-export tax. And it's not based on country, it's not based on region, it's based on trade agreement. Mauritius has trade agreements with all the countries in Africa, so they're not being taxed the same way. All these different trade agreements. That's the rule. If you're like the US has a trade agreement with Canada and Mexico. But if another country wanted to trade with the US, all they got to do is trade with Mexico. And then Mexico will trade with the US and Canada. The best part about this, guys, is I'm explaining something to you that 99% of the people trading the stock market do not know about. They have no idea how trade agreements work. But if you follow the four horsemen in any of these countries, in any of these regions, in any of these trade agreements, you can track what a country is doing. You can track the institutional movements, and you can track the economic health of the economy, the currency, and the financial system. And I'm going to say it again. You don't understand the power of this until you use it. This is the trade agreements that Saudi Arabia has with all of the countries. You see how huge this is? This is the map of Saudi Arabia's trade agreements. So if you wanted to get in on this, all you got to do is track the trade agreements, track the currency, track the oil, track the gold, track the bonds. And you can literally go through this entire network of trade agreements. This is China's trade agreements with their oil. All you got to do is track the oil, track the gold, track the currency, track the bonds. It'll let you know what the institutions are doing. It'll let you know what the health of the economy is, the strength of the currency. Even the central bank system. 216 central banks. All of them are connected. All of them are swapping debt, bonds. You can track institutional movements. Nothing is outside your purview. You can figure out what's happening weeks, months, and years in advance. This is a best kept secret. Now, I tell you guys that you don't have to use this on every single thing you analyze. But sometimes you'll be in a situation where a piece of information will come in dealing with another country, dealing with an import export, dealing with a currency, dealing with a bond. And then when that information comes in, you know that you have the ability to use the four horsemen and figure out exactly what the markets are going to do and how the markets are going to react. All the central banks are connected. All of the currencies are connected. So if you can figure out how this network works, figure out how the causal sequence works, you're going to know what's going to happen in the markets days, weeks, months, quarters, and years in advance. This is a map of gold production. All right. The stronger kind of like beige area is the majority of gold, and the gray areas is no gold. And this is what they do. You have people that are importing gold and those that are exporting gold. And that same trade agreement applies. And we all know that oil does the same thing. This is the gold supply chain. We already know the oil supply chain. We went over that last week. So you can even go through the supply chain for oil, for the dollar, for gold, as they are import exports to different countries, because somebody has to mine it. There's a different country that's going to mine it. There's another country that's going to refine it. There's another country that's going to mint it. There's another country that's going to transport it. You can literally go through the gold supply chain, the oil supply chain. All of this is a part of the Four Horsemen. It all depends on how deep you want to go. The deeper you go, the better you'll be able to predict what the markets are going to do. Are you going to learn this overnight? Nope. But I promise you, if you stick with the prime correlation, just the oil and the dollar, I promise you, if you stick with that relationship between the oil and the dollar, and you learn that correlation between the oil and the dollar, eventually you're going to learn the oil and the yen, the oil and the Canadian dollar, the oil and the Australian dollar, the oil. You're going to learn the correlation between oil and every other currency. And then from there, you're going to learn oil and gold in every other region. And as you're learning those pieces, you're building your understanding of the Four Horsemen. And when you get really good at this, you can look at an article and see the Four Horsemen. Immediately know the economic health. Immediately know the currency strength. Immediately know the correlation with another market. It's like your own personal crystal ball. You can predict what's going to happen in the global markets. Now, I already told you, just by watching dollar and oil, you're already getting some major predictive powers. But when you go that level deep to learn that four-part correlation of the Four Horsemen, you are unstoppable. So let's take a little bit of time. It's only 8:30. Like I said, I wanted to try to get all the way to about 9 o'clock. So let's take another 5 or 10 minutes and find the application. I think I'm going to go ahead and disconnect from YouTube. Should I broadcast this on YouTube or should I keep this private? Let's go ahead and keep it. Let's keep it public. Let's let everybody learn a little bit more about Four Horsemen. I'm going to be generous today. So let's go out and let's find application. Right? That's what I keep telling you. It's all about finding the application. How does this work in real life? So give me a second. We are going to let me share. Let me share my browser. And we're going to go out and show you how to find. Let's find the application. All right. So what's some keywords I can use? First of all, I always start with Reuters, which I should probably start with Yahoo Finance. Let's do Yahoo Finance. Um, Oil supply. Trying to think of a country. Um, what's a good country we can use? Um, well, I don't want. I don't. Let's not. Let's not do. Let's do bonds. Let's do that. Let's do bonds. German Bund. German Bund. Impact on gold. The German Bund is their bond market. Give me a second. This was last week. Jeffries favors buying German 10-year bond. Bond market sell-off jolts global investors as Trump worries. Gold slips. Here we go. 4 days ago. Gold slips amid high bond yields. Uncertainty on Fed rate path. This shows you like there are correlations between the four securities. Gold and bonds, dollar and bonds, gold and oil, dollar and oil. And if you learn the relationships between those four securities or those four commodities, the predictive power is strong. And this is what I mean. Like, let's say we were like researching or we're like looking at news articles and we come across this article. We immediately, our antennas immediately go up and we know this is Four Horsemen. Gold edged lower amid an increase in global bond yields and continued strength of the dollar as traders waited prospect of U.S. interest rate cuts. This is screaming Four Horsemen. Let's go find another article. Here's one. European shares fall. Give me a second. Let this load up. European shares fall in final full session of 2024 as bond yields remain higher. And I showed you this Monday of this week. I showed you how you can correlate the markets, right? So bonds might be attached to dollar, the dollar's attached to interest rates is attached to oil is attached to the stock market. And you can kind of go through that level of correlation to kind of figure out what is going on in the stock market. European stocks fell on Monday in line with Wall Street as still high government bond yields prompted investors to pull out of equities at the end of the year that has been positive for some regional markets. So listen to this, guys. Remember, I told you if the institutions are losing money, if they are reallocating, if they are renegotiating, if they are unsure about what the markets are doing, they will pull their money out of the equity markets and they will put it into gold, the dollar index, or bonds. So let me read it for you again. European stocks fell on Monday, prompting investors to pull out of equities. So what do you think they did? They pulled their money out of the equities and they put it in the Four Horsemen. You can track institutional movements and institutional manipulation, as well as economic and currency health. Your homework assignment, your homework assignment is as you are analyzing, whether it's an economic event or anything else, your homework assignment is if you come across something that talks about the dollar, talks about the oil, talks about the gold, talks about the bonds. And what I mean by that is, you see this article? This article talks about two of the three. It talks about the bonds. It talks about the what was it? No, this one right here. This one talked about the bonds and the strength of the dollar. The gold, actually, three of them. The gold is here, the bonds are here, and the strength of the dollar. Three of them are here. So if you come across an article that's talking about any of the four horsemen, pause. Take a break from what you're doing and analyze that news article. See if you can determine what the health of the economy is. See if you can determine what the institutional movements are, the institutional manipulation. And if you can't figure it out, come to the student room, post the article, tell me what you think the article is telling you, and we'll have a conversation. Because once you learn the four horsemen, you are unstoppable. You are Superman with X-ray vision. And the reason why I'm assigning the homework is because we haven't talked about it enough. So we got to do some kind of application. So sometime this weekend, maybe sometime next week, if you find an opportunity and you find an article dealing with any of the four horsemen, where the article is talking about multiple four horsemen, come to the student room, post the article, and tell me what you think. Do we have any questions on this?
No questions, but it makes perfect sense. Yeah. Homework. Thanks for the homework.
I want you guys to learn it. I really do. And that's what I'm saying. I'm going to apply a little bit of pressure. Don't just listen to what I tell you and then go off. Oh, yeah, that was nice, Aaron. That sounded good. I want you to apply it. And I don't want you to go out and find those kind of articles, but because that's when you're going to find it. You're going to find it on the fly. Like I said, when you're looking for your keys and you find a missing sock, that's when you're going to find the four horsemen. You're not going to be out there looking for it, but in your analysis, you're going to come across these articles that talk about it. And as soon as you see it, pause. Hold on a second. This is the four horsemen. What's going on in the markets? What's going on in that region? What's going on in that country? What's going on in that financial system? What's going on in that economy? Pause. When you see an article talking about it, pause and really look at it to find out. Find out what Canada's doing, Australia's doing, Europe's doing, Britain's doing, Japan, China, Korea, Mexico, South America, Venezuela, no, not Nigeria, any of them. Find out what the article is talking about, what region, whose bonds, whose gold, whose oil, what currency, what central bank. But that's really when you find the articles. You don't go out looking for the four horsemen, you stumble on the four horsemen. But I want you guys to realize what you're looking at and have that ability to pause and say, well, wait a minute. Let me go ahead and put my analysis to the side for a minute and let's figure this four horsemen out. And then find the application. Does it apply to what you're currently looking up? Or you might be able to analyze it, and then a week later, something comes up. Oh man, I remember that four horsemen that I looked up. I promise you, it's going to come back around. But if you just look at it and just ignore it, you're missing a major opportunity that you don't even realize. So if you stumble on the four horsemen, pause. A green light bulb should go off. All right, guys. I think I disconnected from YouTube. So as I said earlier, I want you guys to continue to simulate, even though there's no economic event. I think that today is going to be bullish because you got the bullish CPI, you got the bullish PPI, you got the bullish initial job claims. I'm hoping that that sentiment, especially with the last 2 weeks being bearish, I think that those reports or this week's reports might have turned the markets around. This entire week, the markets were bullish. So go ahead and kind of, do your simulation for today, for the, over the weekend. But I also want to encourage everybody that if we truly do have the bullish, cycle back, schedule your one-on-ones. I did my one-on-one with Jay yesterday. He will tell you, you want to do the one-on-one. It's going to change your entire perspective of the markets. Here's another announcement. Remember I told you that I'm going to start broadcasting on Red Notes, and I'm going to kind of do like an AI I'm going to do the voice in Chinese. I'm going to do it in both. So I'm going to do an AI video where I'm speaking Mandarin with English subtitles, and then I'm going to do American video with Mandarin subtitles. And I'm going to post both of them on the platform. But check this out. I'm coming up with a 90-day masterclass. Isn't that what I've been telling you guys for 2 years? That you can go 3 months, learn everything you need in 3 months. So that's what I'm building right now. I'm going to build a 90-day masterclass where you're going to learn everything you need in 90 days. I'm going to take the first 30 days and broadcast it. I'm going to broadcast it on YouTube. I'm going to broadcast it on Red Note. I'm going to broadcast it on Fanbase. I'm going to broadcast it on LinkedIn. I'm not using Facebook. But I'm going to broadcast the first 30 days free. And if you want to learn the rest of the masterclass, you got to sign up. But I'm literally going to take you step by step. Everything, the psychology, the startup strategy, the profit schedule, everything in 90 days. I will let you guys know when I have it ready, when I'm ready to launch it. Hopefully I can put it together in the next week because I want to start posting on Red Note by next week. But I came up with this idea. Now, here's the other thing. Inside of the 90-day masterclass, not only am I explaining everything, I'm connecting the course, I'm connecting the workshops, I'm connecting the one-on-ones. 90-day masterclass. We're going to take you through everything in 90 days, step by step. I think this is going to be powerful. Obviously, hopefully, when I put together the curriculum for the 90 days, we'll do some of that in the Zoom. That's the only announcement that I have. I'm going to start. Well, I got to make sure that the course works because I'm still having somebody that can't log in. So I'm going to work on that this weekend. If everybody that has a course, can you please log in to make sure you can log in successfully? And I need you to let me know if you can, and even if you can't. I want to know if everybody can log in because I want to isolate, is it just the one person or is other people having the same problem? So I need everybody to try to log in to the course today. Even if you can't, even if you can, either way, please let me know. So I know if I need to fix the problem globally or just the one person. What else we got? I'm also going to be reaching out to you guys um to give you the second course. So all of the people that have been with me for 1 year, I'm going to be unlocking. You know what I'm going to do? If you guys don't mind, remember I said that I'm going to give you the rest of this month to go over the course that you have? Let's do that first. Once everybody goes the rest of January and goes over the course material, next month, after you've gone over the course material of wherever you are, after I know that everyone's going over the initial course material, next month, that is when I will give you the second course. Because I did promise you I would give you the second course. So if you're in the crossbow, I'll give you the King Cheetah. Right? But I'm gonna wait. If you're in the AI, I'll give you the King Cheetah after you learn the course material over the next 3 weeks. Also, we might as well wait for the other part. Well, also starting next month, I also am going to start taking orders on your mouse pad or your mug. Like I said, go to the shop on the website, pick the item you want, but I'll take the order for that starting next month as well, and we'll get that shipped out to you. I want to encourage everybody again to simulate. I want to encourage everybody to trade today. Once again, if you have issues, if you have problems, if you have questions, concerns, hit me up on WhatsApp. If you have issues over the weekend, maybe you're analyzing, whatever it is, let's do all of that. I'm not going to do a Money Monday or a secret session until probably the last week of January. So we got another 2 weeks. The last week of January, I'm going to do some kind of a secret session and maybe even a Monday Monday. Next week, I'm going to go ahead and add all of the economic events for next week. We're going to do a couple of those, but I'm still going to kind of do these presentations and then the application as well. So we're going to continue to move forward with the curriculum. If you have any questions on this, guys, I assume that if you don't contact me, then you understand everything that I'm explaining. So even if you need me to double confirm, let me know. I'm never going to tell you I'm good at explaining. I don't mind explaining it multiple times. Some of you may feel self-conscious asking me questions in the Zoom. Reach out to me one-on-one. I want to make sure everybody is on the same pace. I don't want to leave anybody behind. So please, I made sure to get rid of the people. So everybody in that student room is on this is at the same level. I just need you to reach out to me in the student room if you have questions. And even if you reach out to me on the private, if I think that I'm going to answer your question, but if I think that that question will benefit, I'm going to copy it back into the student room and I'm going to copy my answer back into the student room. So, like I said, either ask the question in the student room or ask it privately. If I think that it will benefit, I'll pop it back into the student room so other people can benefit from the answer. All right. But next week, schedule your one on ones. If you have not done a one on one, reach out to me because it's time to make money in 2025. All right. We'll leave it there, guys. I appreciate everybody's attention, their attendance. I don't have to worry about the riffraff coming in arguing with me. I love this format. The Zoom is the best thing ever. I'll keep you guys updated. I think this is going to be in the TikTok. TikTok is gone this weekend. So by Monday, TikTok's going to be black. So we'll see how that works out. I will let you know when I post on Red Note. I need 500 followers. And I do know that once I post on Red Note, I'll get my 500 followers quickly. Once I have my 500 followers, I can go live. So I'll keep you guys updated on how that goes as well. I'm probably going to be broadcasting one time in the morning, one time in the evening because of the time zone. But I will not stop the Zoom. This Zoom is going to stay exactly where it is. I just got to find a way to schedule around and recruit in the morning and in the evening. And I'm going to do that either on Red Note, Fanbase, or LinkedIn.
Hey, Aaron.
Yeah, yes, sir.
For what it's worth, and I don't know if others have heard this, at least what I'm hearing is TikTok ban is not going away, but Biden's administration's, at least what I'm hearing reported, they're not going to enforce the ban. So
That's what I heard.
yeah, so they're going to leave it for the
Trump.
oncoming to deal with it. Which who knows? This thing may still be around for a while, is what I read into it.
I was watching the news girl, the blonde haired news girl this morning, and what she explained was exactly what you're saying, is that basically Biden kind of handed the reins over to Trump. He's going to wait for Trump to come in, and she gave like three scenarios, but the one scenario is probably the most likely. Because she said that basically he can tell the new attorney general not to enforce the law. That's probably not going to happen. The one that makes the most sense, he wants a U.S. company to buy the company. And that's probably the best way to go about this. Now, granted, the TikTok algorithm is not going to come with the purchase. But the only way I think that he's going to try to save TikTok is there's going to be that, because he's a businessman. So he's going to find it may even be Elon Musk. He's going to try to find somebody that's going to buy the TikTok to kind of try to enforce it.
Yeah.
But I already kind of told you guys that there's a way around it, you know, even, and because that's another thing she said, that even TikTok can restructure. She did mention something that I told you guys last month. TikTok can just restructure their corporation to kind of get around it. So it's not 100% done. The only thing that I'm worried about is what they said in the Supreme Court hearing, is that because keep in mind, we're also waiting for that as well. They said that if it doesn't go in their favor, they're just going to go dark. They're just going to flip the switch. And all of the service providers in the U.S. are just going to go away, like it's all done. So that's what I call the worst case scenario. So that's what I'm shooting for. If something else happens, then we'll see. But likely, come Monday, I'm already expecting TikTok to not be active, at least for us in the U.S. Somebody has already dispelled the whole VPN. You won't be able to do that. Waiting for the app to slowly digress because there's no updates. I'm not assuming any of that's going to happen. I'm assuming Monday morning, somebody's going to flip the switch and turn TikTok off. So I'm already moving around, migrating. Red Note, LinkedIn, fan base, and obviously YouTube. So those are the 4 platforms that I'm going to go to. Like I said, I'm not dealing with Facebook. I'm not dealing with Instagram. I'm going to find other platforms that I can recruit. I'm still hoping TikTok stays around, but and I'm not even looking to go to Lemonade. Lemonade is not even a thing because that's still ByteDance. That's just putting ourselves back into the same pot. They had a problem with ByteDance. I'm not going to Lemonade. That's still ByteDance. We're not doing that. So yeah, if you guys got any thoughts, any new information, if you find an article that of something new that's going to be happening over the weekend, post it in the student room so everybody can read it. All right, we'll leave it there, guys. Thanks so much. Be safe, guys. Don't lose money in the markets. Reach out to me if you are going to be trading today. I'll see you guys in the student room. I'll see you over the weekend. Otherwise, I'll see you Monday morning, probably 7-ish, because I might be trading
So
next week.
the markets are closed Monday, right? Because of inauguration day and the
Yes, yes,
market
yeah.
Monday.
I'm so glad you mentioned that. Yeah, they changed the time because of Martin Luther King on Monday. So yeah, I'm so glad you mentioned that. The markets will be closed on Monday because of Martin Luther King. They changed the times.
Mm-hmm.
So, and I think some markets will be open, but I'm gonna assume that all of them are. So let's do that. Let's do that. Let's meet on Tuesday. Since the markets are gonna be closed on Monday, let's meet on Tuesday, 7 o'clock. Sounds good?
All right.
All right, guys. Enjoy your weekend. We'll see you on Tuesday. 7 o'clock, 7:15.